Well, I hope you can feel the euphoria here. We have a new gold record. As PDAC happens, a good reason to party if you are in Toronto at the world's biggest mining conference. Hello and welcome to the Northern Miner Podcast. My name's Adrian Pocobelli. There is too much to get through here today. So let's begin. Gold is at $2,129. It's basically jumped about $80 in the last, let's call it, 2 or 3 days. You see a big spike on the chart. It was at 2050, last week, and now we are at 2129. It looks like a breakout, doesn't it? So that is interesting. One does wonder about the PDAC curse, and if you've never heard of the PDAC curse, it is this idea that, precious metals and deal making and everything is going well at the conference, and then afterwards, when the news flow dries up, when people have to pay their taxes in April, that all of a sudden, the PDAC curse takes effect and things slow down. So let's hope that this is not the case. Let's be contrarians here and enjoy our wonderful PDAC week here. And hello to everybody in the conference. Come join us at the Northern Miner booth. And so we have a wonderful show here for you today. We have Juan Biset, former Undersecretary of Mining and Sustainability in Argentina, a former government official who is nestled right in there in the mining department, who gives us the lowdown on what is happening in Argentina from his perspective. It is super interesting and educational and helpful in our very interesting discussion here, which again is taking center stage. And let's go back to the State Department website where again, PDAC is center stage. Joint Statement of the Minerals Security Partnership, March 4th, 2024. And they have released a joint statement from the governments of the United States, Australia, Canada, Estonia, Finland, France, Germany, India, Italy, Japan, the Republic of Korea, Norway, Sweden, the United Kingdom, and the European Union following the conclusion of the MSP Principles meeting in Toronto. And it says here, on Sunday, March 3rd, the partners of the Mineral Security Partnership, or MSP, held a Principles meeting in Toronto during the Prospectors and Developers Association of Canada annual conference, the largest mining event in the world. The theme of the Principles meeting was responsible investment in critical minerals with the key objective to strengthen collaboration between the MSP and like-minded partners. And this is quite interesting because, as you're going to see here, it keeps coming back to this idea that Robert Friedland had said in a Northern Miner interview about 2, maybe 3 years ago now, that we're going to have very likely an ESG price for metals. In other words, we're going to have ESG copper at a certain price and non-ESG copper at another price. And listen to this. Continuing the statement here, the MSP aims to accelerate the development of diverse and sustainable critical mineral supply chains through working with host governments and industry to facilitate targeted financial and diplomatic support for strategic projects along the value chain. MSP partners strive to elevate environmental, social, and governance and labor standards across the global minerals sector. The MSP commits to support only those projects that follow high ESG standards, promote local value addition, and uplift workers and communities in recognition that all countries can benefit from the global clean energy transition. Jose Fernandez, U.S. Undersecretary of State for Economic Growth, Energy, and the Environment, chaired the meeting. So very interesting. They also had meetings with Argentina, again, which we're going to focus on this episode, Brazil, Chile, Jamaica, Mexico, and Peru to discuss critical mineral supply chains, project development, and opportunities and challenges in mining, as well as in midstream and downstream processing. As well, they welcomed Estonia as the newest MSP partner, and if you look on a map, you'll see it shares a border with Russia there and kind of nestled in there in between Finland and Russia. So interesting development there. Estonia is an important stakeholder in the production and processing of rare earth elements and will be a valuable partner in the MSP. So very interesting development there. And they also had another meeting that they hosted at PDAC. Mineral Security Partnership hosts Graphite Supply Chain Deep Dive meeting at PDAC. So governments are really getting involved here in a way that we haven't seen, I would argue, at least since I started working at the Northern Miner in 2012 when I started going to the PDAC conference. There has always been a government role. Usually it's softer. Prime Minister Justin Trudeau showed up a couple of years ago, Stephen Harper has showed up a couple of years ago. So it's not uncommon for government to be involved, but this is a whole other level. We're getting the State Department showing up and chairing meetings in Toronto at PDAC. This is a different situation, and this is echoed by what we're seeing in Chile with Janet Yellen visiting, as we have here. Now the Treasury Secretary of the United States, the person in charge of the books, is off visiting lithium-rich countries. Here's a story from Bloomberg News via mining.com. Yellen praises Chile's policies and visit to lithium-rich ally. U.S. Treasury Secretary Janet Yellen on Friday lavished praise on Chile during a visit aimed at strengthening ties with an ally whose critical minerals are key to weaning dependence off China. The South American nation has, quote, an impressive agenda, end quote, including issuing the region's first sovereign green bonds, Yellen said after a meeting with Finance Minister Mario Marcel in Santiago. She will meet with President Gabriel Boric later in the day. And here is a quote from Janet Yellen, quote, as a leading producer of both copper and lithium, Chile has a critical role to play in the supply chains that will power our world's transition to clean energy. American companies are investing, and we see opportunities to further integrate our supply chains with benefits for both our economies, end quote. Finally, here on Saturday, Yellen planned to tour Albemarle Corp's lithium processing facility at Antofagasta in the north of the country. Chile has the world's largest reserves of lithium, a metal essential for making batteries that power electric vehicles, and is the number 2 supplier after Australia. So another high-ranking government official taking a very public trip to help, secure the supply chain in terms of the critical minerals that are really at the beginning of the supply chain. Another interesting story, this is also a press release from the State Department, Assistant Secretary Pyatt's travel to Australia. This is March 1st. Assistant Secretary for Energy Resources Geoffrey Pyatt will travel to Australia March 3rd to 9th. He will arrive in Perth March 5th for a series of private and public sector engagements. He will engage globally prominent mining facilities and operation centers and discuss Australia's leading role in the Minerals Security Partnership, as well as its world-leading status in critical mineral processing, carbon management, and environmental, social, and governance investments. And again, there's going to be a focus on green technologies here. And so very interesting there. Now, zooming out, as we cruise through what's going on here, we continue to have hostilities on the eastern side of the Democratic Republic of Congo, also known as the DRC. So Rwanda is thought to be supporting these M23 rebels that are in the eastern side of the Congo. There's a lot of antagonism between the two parties. As far as I understand from my reading, date back to the 90s and everything that was going on in Rwanda then. So it continues. We've been discussing this for a couple of weeks. The EU on Monday put out a statement by the High Representative on behalf of the EU on the escalation of hostilities in the eastern part of the country. And why this matters to us is it's the whole battle for Africa. The copper belt goes through Zambia and the Democratic Republic of Congo. There is a lot at stake here, and there are also railway lines that go to Tanzania, to the eastern side of the African continent, and they're planning to build them out to the western side of the continent, one imagines, to help supply the U.S. and Western economies. So just a little bit on what is happening there, because there are concerns about a regional war here. And what is the underlying cause here? One wonders the role of natural resources, and the EU highlights natural resources as one of the issues at stake here. So just a couple of excerpts here. The EU is extremely concerned by the escalation of violence in the east of the Democratic Republic of Congo and the worsening of the humanitarian situation, exposing millions of people to human rights abuses, including displacement, deprivation, and gender-based violence. The military buildup, as well as the use of advanced ground-to-air missiles and drones, is a worrying escalation that further endangers the situation, in particular around Sake and Goma. So, surface-to-air missiles and drones. And then a couple of paragraphs down, the EU condemns the latest offensive by M23 and reiterates its strong condemnation of the actions by armed groups in the eastern DRC. Now, they also pin support for M23, which are the rebels that are in the eastern DRC. They pin them on Rwanda. In particular, the EU condemns Rwanda's support for M23 and military presence on Congolese territory. It strongly urges Rwanda to immediately withdraw all its military personnel from the DRC, as well as terminate all support and cooperation with M23. So, as far as I understand, Rwanda has denied their association with M23, but the US and the EU are not buying it. Now, also, Burundi, which, if you look on the map, you'll see Rwanda is on the eastern side of the DRC, right in the middle, and Burundi is a country almost around the same size, just beneath Rwanda, and also sharing a border with the DRC, and Burundi has recently closed their border with Rwanda. This was apparently closed for several years in the teens and was recently reopened in 2022, and now it has been closed again. So all sorts of concern in this region, and of course, a very mineral-rich region. Now, finally here, let's go back to the EU statement, because they mention natural resources. The EU remains committed to support peace, stabilization, and sustainable development of Eastern DRC and the region as a whole. This includes addressing all the root causes of insecurity and regional instability, including poor governance and corruption, lack of inclusive institutions, entrenched impunity and abuse of power, and violent competition for access to and control of land and other natural resources, as well as the use of illicit networks for the trafficking of natural resources. So, as we discussed last week, there is thought to be a lot of gold in this region, as well as coltan, which is used in technological devices. Now, moving over to West Africa. So, just a kind of a general update here. So, Mali, Burkina Faso, and Niger have left ECOWAS, which is the Economic Community of West African States, which kind of turned into a bit of a military alliance of sorts, where they would take care of certain regional conflicts if they felt the need, is my impression. So Niger, Mali, and Burkina Faso have left ECOWAS, and they have created their own alliance of Sahel states. So again, this bloc of military juntas continues to have a kind of momentum of consolidation. And interestingly, we were looking at Senegal, which has a strong history of democratic institutions. And Senegal is to the west of Mali, and it has a deep water port, which I imagine for this bloc would be pretty important. And interestingly, the president there attempted to break the constitutional law of having to leave on April 2nd and tried to set the elections for December. And the Supreme Court ruled that that was unconstitutional and that he had to have an election, but they didn't give a date. And so the date has still not been set, so people are starting to protest. And we have an update here from RFI, which is a French news website. Senegal opposition demands election to pick new president by April. And it says Senegal's President Macky Sall has again insisted he will leave power on the 2nd of April, the day his mandate ends, despite postponing the election that would have picked his successor. The opposition has demanded that the vote be held before Sall's term is up, but so far the president has only committed to calling an election before the end of July. So the court probably should have put a date on that. And finally, just in the region, we've seen cryptocurrencies go vertical. Bitcoin looks like it's about to break its all-time high. It's happened very quickly. And meanwhile, we were discussing, is there an exodus out of fiat in countries like Nigeria, which has a major inflation problem, as well as Argentina and Turkey? Is this part of the reason that Bitcoin is going through the roof? I mean, what would you do if you were in one of these countries? It's an interesting question, and we saw that Nigeria was trying to crack down on people using crypto. And of course, Nigeria has a reputation of being a cryptocurrency country, and they were trying to crack down on the use of cryptocurrency exchanges in the country. Now, we got this story from the BBC. Nigeria orders cryptocurrency firm Binance to pay $10 billion, and they have arrested a couple of executives. The Nigerian government says Binance manipulated foreign exchange rates through currency speculation and rate fixing, which have seen the Naira, which is the Nigerian currency, lose nearly 70% of its value in recent months. So one wonders just how big of an impact these inflating fiat currencies is having on the price of Bitcoin. Just finally on this. On Tuesday, Nigeria's central bank governor Olayemi Cardoso said Binance Nigeria had moved $26 billion worth of untraceable funds. It makes you wonder, is everybody trying to exit through Binance? I mean, again, it's kind of back to what would you do if you were having Nairs that were inflating like crazy? Final story here, and I just want to touch on it because I actually want to dedicate more time to it. In an intro in the coming weeks, China secures 15-year Indian Ocean exploration deal, and this is with the International Seabed Authority. So China moving into deep sea mining, this is happening, but I just want to touch on it kind of beneath the headlines here. They have signed a 15-year contract to explore the Indian Ocean. In this international ocean territory, what does it mean? It looks like China is making inroads here in deep sea mining and kind of under the radar. This is the People's Network, bnnbreaking.com. So an interesting headline there from bnnbreaking.com. So coming up, we have a wonderful interview with FM Global's Eric Jones, and FM Global is a risk consultancy firm, and he talks about the costs of disruption at a mining operation and how significant they can be. So a fascinating consultation here with Eric Jones of FM Global, who is Vice President and Global Manager of Business Risk Consulting at FM Global. So with that, if you want to find us online, you can find us at northernminer.com. You can find us on Twitter at northernminer. Find us on Instagram at The Northern Miner, and on Facebook, LinkedIn, and YouTube, where we also host these podcasts, and wherever podcasts are available, including Spotify, Apple Podcasts, and SoundCloud. And with that, let's turn to Eric Jones, Vice President and Global Manager of Business Risk Consulting at FM Global, for this week's CEO Spotlight. Joining us today, I'm very pleased to welcome Eric Jones, Vice President, Global Manager, Business Risk Consulting at FM Global, for this week's CEO Spotlight. Eric, welcome to the show.
Thanks, Adrian. I appreciate it.
I am thrilled to have you on. I think you're dealing with a very interesting aspect of the industry here. Risk consulting, you have a financial background. And so in the mining industry, it's known as a very difficult business. It is a risky landscape. Can you talk to us about the importance of resilience in mining?
Sure. The importance of resilience, I don't think that's unique to mining. Every company really needs to be resilient these days, because the reality is we live in a volatile world, especially when you look at climate risks and technology risks, geopolitical, economic. There's all sorts of things out there. The list goes on. And if something bad happens, there are implications beyond just the financial implications, which can be significant. But, people suffer as well. Employees, the communities that support these businesses. So resilience is really a matter of good corporate governance. It's a responsibility that management has for every company. And certainly when you look at mining, there are a lot of unique risks related to mining. There are a lot of things that can go wrong. There are lots of different single points of failure. So this concept is just even more significant when you look at it from that perspective.
Okay, excellent. So when something goes wrong with a miner, for instance, what is the cost of disruption within the context of mining?
When you look at the cost of a disruptive event, I'll use an iceberg analogy as an example. The top part above the water for an iceberg, that's the part that you can address through risk transfer, through insurance. But then you've got this bottom part of the iceberg under the water. And that's all of the uninsurable types of impacts that can result. And we've got an approach that we take to try to quantify that underwater part of that. We call it total financial loss modeling. And it breaks it down into three main components, one being lost growth, the other being loss of market share, and then the last being negative investor sentiment, or where your cost of capital increases. Because if you're not growing and if you're losing market share, you're not going to meet earnings estimates. Investors are going to perceive there to be more risk in your business. Your cost of capital is going to increase. Now, as that pertains to mining, it's a little different because a lot of those things manifest themselves in opportunity costs. What if your operations go down and you've got demand spikes and you've got price increases that you're going to miss out on. And when you're back in operating condition, prices plummet. So there could be operating costs. You could lose contracts. There's a lot of things that could happen that would result in your future cash flow streams being far less than they would have been otherwise, and the value of those future cash flow streams not being worth as much. So when you look at the true financial implications, it goes beyond just that immediate disruptive period. Those can extend out forward into time.
Clearly, then, a bit of a chain reaction can occur here. Unplanned things can happen. So, what then, as an expert really in business risk consulting, what kind of things can be done to mitigate risk in a mining operation?
To me, risk mitigation comes in two different forms. You've got the business continuity planning side of things, and then you've also got more of the physical risks and loss prevention measures that you can take. And if you have a really good risk quantification framework, if you know where your business is exposed and how much money you might lose if various parts of your operation go down, and what the lead times are that you would be experiencing to be able to recover, then you can start making better decisions on all of these things. You can better prioritize your risk improvement and your loss prevention measures. You can also understand what are the things that you can do from a business continuity standpoint to help reduce the amount of time that you would be down from a loss. Might you keep more spares on hand for certain types of equipment? Or might you try to look at alternative suppliers or look at different methods of operating, making sure that you're able to leverage perhaps other parts of the business if you have a disruptive event. So, it's really having that risk quantification to drive more effective risk management decisions.
Okay, excellent. Now, FM Global has a business impact analysis, and that is a tool for quantifying and prioritizing risk. Can you discuss that tool and a little bit of what you do as a consultant when you come in to a mining operation? Like, what do you do? What are you looking for? What are these quantification tools that you have here?
So I break our business impact analysis approach down into three elements that all get kind of blended together. So when we go out and we work with a client, the first thing we're going to do is understand the business. We need to understand, how do your operations work start to finish? What needs to happen to be able to produce revenue? Then we get an understanding of your financials. We take your financial information and overlay it on top of that business model so that we understand if you lose a conveyor, if you lose a loader, if you lose a dryer or a blender or whatever kind of operational processes you have there, we can understand what the financial impact is that can result from that, understand the downtimes and so forth, and also understand what's your ability to mitigate. Do you have other operations in the area that could assist? Do you have things that could reduce those lead times? What ultimately is the net exposure to the business? And then the last piece is the engineering information that blends in with that. That gives us a lot of the lead time information. It gives us periods of restoration and so forth. And it also allows us to quantify specific scenarios. If the location is flood exposed, for example, we may quantify a flood scenario to better understand that specific risk. So it's blending all three of these elements together to really have a holistic view of your risks. And then once you've got that, then you can start to drive better decisions to help mitigate and prevent those things from happening.
And just very briefly, can you just give us an example of a single point of failure, for example, or something bad that can happen within a mining context and how that might play out?
Sure. Mining operations in general are single threaded. I mean, it's basically a linear process by and large. And if you have I like to use the conveyor example because we've seen several conveyor losses. We've seen electrical equipment breakdowns. We've seen various losses like that can occur. So anything in the process could potentially disrupt the entire operation. Now, one of the things I didn't mention when I was talking about our business impact analysis process is the concept of operational interdependencies, where one thing is dependent upon something else happening. I know from a project I did years ago where a coal mining operation where, I came to the realization that, it's not just selling coal out of the ground. You're selling a specific product that has certain technical specifications. And in the case of the operation I was looking at, they had 4 different mines, I think. And one mine had coal blended in with every single product that they offered. So it's not just necessarily pulling it straight out of the ground. Sometimes there are interdependencies involved where, if they lost operations at that particular mine, it was basically going to shut down 4 mines because they wouldn't be able to sell any of their products to meet the contractual demands that they had in place to meet the proper technical specifications. There's just no shortcut to understanding the business and really making sure you understand where your risks are. And there can be some surprises when you go through that process.
Indeed. We've talked about the internal side of the company and, looking at risk mitigation. This isn't just about getting some sort of insurance and then not worrying about it. It really is about, coming in and trying to prevent these catastrophic things from happening. So, what about external factors? I mean, are there ways to mitigate risks, say, with the supply chain, and this sort of thing, or is that a bridge too far?
Not necessarily. Property risk and disruption risk is usually a blind spot when it comes to supply chain management, but companies need to take the time to understand, where are we single sourced? Where are we sole sourced? Single source being, you get it from one place, but you're pretty sure you can get it from others, whereas sole sourced, you get it from one place and you have no idea where else it would come from. You've got to try to minimize that and understand that, where can you identify alternatives? Again, going back to the coal mining example, the one that I recall is they got, these massive tires for loaders, and they all came from one individual plant. And if that plant went down, they would have a very difficult time getting new tires in. And I was surprised to hear how quickly these tires wear out and get punctured, and they have to replace them. So that represented an interesting risk that they hadn't fully understood. So there are things that can be done, but you can't mitigate every single risk. That's not reasonable. That's why you have to have risk transfer in place. But you got to go in with an understanding of what those risks are, kind of go in eyes wide open to know where you can do certain things to minimize these impacts.
Okay, excellent. And just bringing it all back home, then, why is it important then for mining companies to invest in risk mitigation, resilience? What are the benefits and what is the outcome in your mind by investing in risk mitigation?
So, we used to have a tagline years back: when you're resilient, you're in business. And, that's pretty appropriate. Companies just cannot afford not to be resilient. They've got a responsibility to their employees, to their investors, to the communities. And, with the frequency that bad things seem to be happening in the world these days, severity and frequency of bad events just seem to be increasing. So how can you not afford to be resilient? And a lot of times companies can benefit when they're resilient if you've got impacts that occur to certain operations, but it doesn't impact you. You may be able to take advantage when somebody else is out of the market. You're the one gathering up the contracts. You're the one benefiting from the price increases. You're the one that's reaping the benefits of somebody else's opportunity costs. So there's clearly benefits out there. There's plenty of examples of when those things have occurred, and it's just good business sense at the end of the day.
Indeed. And just finally here, I mean, I would think like just a practical example, if there's some sort of flooding that occurs, which sounds like not crazy, or a hurricane comes through, if you have planned this out, to your point, you may have a competitive advantage.
Absolutely. That's the idea.
Eric Jones, Vice President, Global Manager, Business Risk Consulting at FM Global. Thank you for joining us on this week's CEO Spotlight.
My pleasure, Adrian. Thank you very much for having me.
And thank you once again to FM Global for sponsoring this week's episode of the Northern Miner Podcast. Turning to the website, a big story here: more government collaboration. Canada and Australia boost collaboration on critical minerals. This is Reuters via mining.com. Canada and Australia have agreed to promote shared priorities related to the extraction, processing, and refining of critical minerals, they said in a joint statement on Monday. The announcement came on the sidelines of the annual Prospectors and Developers Association of Canada conference in Toronto. Demand for critical minerals used in batteries is projected to expand significantly in coming decades as the world transitions to clean energy. Canada and Australia both have large deposits of the minerals. They will explore opportunities for R&D collaboration and support bilateral mining and service sector trade and investment through what they said was a non-legally binding understanding. Canada and Australia will also push for critical mineral supply chain transparency and advocate for strong environmental, social, and governance credentials in global supply chains, according to the statement. So again, another hint here of ESG pricing of metals, isn't there? Continuing on, Australia considers tax credit for minerals processing, says industry group. This is Reuters via mining.com. The Australian government is considering a tax credit for companies that build processing facilities to boost the value of green energy minerals such as nickel and lithium, the head of a mining industry association said on Wednesday. Australia's government is seriously considering a possible 10% production tax credit that would apply to companies developing processing facilities for critical minerals, Association of Mineral and Exploration Companies CEO Warren Pearce said. The tax credits would extend beyond companies in Australia's nickel sector to include producers of lithium, vanadium, cobalt, graphite, and rare earths, he said to reporters in Canberra, according to a recording of his news conference provided by AMEC. And we have a quote from Warren Pearce, the CEO of AMEC. Quote, around the world, other countries are making major market interventions that are making it difficult for Australian companies to compete. We want to keep more of the value of our minerals here in Australia by building value-adding industries. Everybody wants to own their own supply chain now. Quite interesting. To me, that tells us that everything's about to get a little bit more expensive, perhaps. Asked if the government had taken AMEC's advice on board, he said, quote, we know it's under serious consideration in the 2024 budget process. So, interesting discussion in Australia. Continuing on, BHP launches major worldwide restructuring, AFR reports, and this is Bloomberg News via mining.com. BHP Group, the world's biggest miner, has embarked on a major restructure of its global business, affecting units from mine planning to decarbonization and heritage protection, according to a report in the Australian Financial Review. The changes led by Chief Executive Officer Mike Henry will see several specialist teams disbanded and their functions reassigned in a bid to cut costs and simplify operations, the AFR reported, without saying where it got the information. Individual commodity units will have more responsibility to run themselves self-sufficiently, it said, adding that BHP had started shedding jobs in Australia. So here's a statement from BHP in a response to an email from Bloomberg News. Quote, as part of our continuous improvement in how we approach work, we have made some changes to better align work activities within assets and support quicker decision-making. It kind of sounds like layoffs, doesn't it? BHP, a major producer of everything from iron ore to copper and metallurgical coal, suffered a sharp profit slump in its fiscal first half. While that was largely due to a $2.5 billion write-down in its nickel business, most major miners have been hit by cost inflation and softer commodity prices. In its financial results last week, BHP said the cost of mining was higher than prior to the COVID-19 pandemic and warned that while prices pressures from energy and logistics had eased, labor costs remained a key risk. In Australia, BHP's country president, Geraldine Slattery, sent a message to staff outlining the changes to functions including health, safety, environment, and mine planning. The AFR report didn't say how many staff members might be affected by the restructure. And continuing on, nickel may see deficit on Indonesia hurdles, Macquarie warns. So we've been hearing for weeks how nickel is oversupplied, and here, Macquarie puts out a contrarian take here. This is Bloomberg News via mining.com. A head-turning article here. The global nickel market could swing to a surprise deficit this year if growth in Indonesian output is constrained by slow mining permit approvals, according to Macquarie Group. While the bank's base case is for a surplus of less than 40,000 tons, that may be in jeopardy if Jakarta's approvals are slow and full-year growth in local production dips below 13%, analysts including Jim Lennon said in a note. Quote, this is a major change from our recent forecasts, end quote. So, just goes to show how quickly things can change in this industry. Now they're talking about a potential nickel deficit after hearing nothing but nickel oversupply till 2030. Isn't that interesting? A lesson there. Continuing on the nickel theme, Glencore opens new nickel copper mine at Raglan. This is Maryland Scales at the Northern Miner. Glencore says its new Anuri underground mine at its Raglan nickel copper operation in Nunavik, Quebec, will extend the nickel-copper operations mine life by at least 20 years. Raglan produced 39,000 tons of nickel last year, and the opening of a new mine there contrasts with closures of nickel mines in Australia amid a glut of Indonesian production that has weighed on prices. So Glencore is being contrarian and opening a new nickel-copper mine. Continuing on, lithium investors are looking beyond price plunge, Chile minister says, and this is Bloomberg News via mining.com. Lithium companies are looking beyond a recent price plunge, maintaining their interest in new projects to be offered in Chile, according to the country's top mining official. And we have a quote from Mining Minister Aurora Williams, who told reporters on Wednesday, quote, "From the contacts we've had, visits, lobbies, we see that the interest remains. Beyond prices, the challenge the world faces in terms of energy transition and climate change are still pending," end quote. So not giving up after quite a fall in lithium prices. You know, it's kind of back to what Rick Rule says. What is it? Be contrarian or be a victim? In a sense, you have to give credit to Glencore and here the government in Chile. They're being contrarian. They're not just following the price and saying, okay, we got to shut everything down. So let's continue here. SQM profit down 82% as lithium prices slide. This is Reuters via mining.com. Chile's SQM, the world's second largest lithium producer, on Wednesday posted an 82% fall in its fourth quarter net profit from a year earlier, below forecasts as prices for the key battery metal continued to slide from earlier peaks. So not a huge surprise here. There is a quote from SQM chief executive Ricardo Ramos, who said in a statement, quote, "The excess in lithium and battery materials is expected to continue during this year, keeping pressure on lithium market prices." Now, we have another story here on SQM, this time from Bloomberg News, which I thought was quite interesting. Back to this be a contrarian or be a victim idea. SQM expands into lithium glut and bet that buyers will return. SQM, the world's number 2 lithium producer, is plowing ahead with expansions in an oversupplied market, building stockpiles of the battery metal to be ready when purchasing rebounds. The strategy is a double-edged sword for the market. By continuing to increase output when buyers are still running down inventories, SQM may help prolong the glut. But it's also a bet on buyers returning as underlying electric vehicle demand continues to grow in the shift away from fossil fuels. So they are continuing to plow ahead. And scrolling down the article a bit, an interesting line here. They are referencing Chief Executive Ricardo Ramos, who said there's upside risk to prices from delays in new projects without naming them. So it's this idea that perfection is often priced into these markets, as we see in Indonesia. As someone who's followed this beat for over a decade now, you do start to get skeptical when people start making projections out to 2030, say on the nickel price and what's going to happen in nickel. Nobody knows. And it's almost like the whole idea to even attempt to make a projection of that kind, perhaps it's useful, but I mean, perhaps should be taken with a grain of salt. Continuing on, Critical Metals plans EU's first battery-grade lithium mine in Austria. You know, an unthinkable headline here. This is by Northern Miner Group staff. The chairman of Critical Minerals says he's unfazed by a plunging debut this week on the NASDAQ exchange and depressed commodity prices as the company advances what could be Europe's first battery-grade lithium mine. Be a contrarian or be a victim. People are learning. Critical Metals, which formed in a merger between European Lithium and Washington, D.C.-based Sizzle Acquisition, fell 41% from its listing on Wednesday to close at $10 per share on Friday, valuing the company at $23 million. Lithium carbonate was $13,000 per ton on Friday, compared with $60,000 per ton a year ago, according to the Wall Street Journal. Finally, here, the company owns a $1.2 billion fully permitted Wolfsburg lithium project in Carinthia, Austria, set to become Europe's first battery-grade lithium mine by 2027. It has secured supply agreements with BMW and a deal with Riyadh-based Obeiken Investment Group to build a lithium hydroxide plant in Saudi Arabia. That 50-50 joint venture aims to construct and operate the plant to convert lithium spodumene concentrate. And finally, we have a quote from Chairman Tony Sage, who told the Northern Miner, quote, "If you're in production now, you're in a little bit of a problem, but we're going to come out of the construction phase at the right time supplying BMW. If you look at all the forecasts of every research house, it's going to be a squeeze around that time, so prices should be up," end quote. And finally, just a couple of headlines. Chinese outbound investments in EVs likely set new record in 2023. This is Reuters via mining.com. Now, it looks like if we look at this story, if we scroll down a bit, it looks like China is flooding the market with electric vehicles. So not only solar panels, not only nickel, potentially, also electric vehicles themselves are being flooded into the market. Growing alarm over Chinese industrial capacity flooding the European Union with cheap products, particularly electric vehicles, is opening a new front in the West trade war with Beijing, which began with Washington's import tariffs in 2018. China could be churning out 10 million excess vehicles per year. Advisory firm Automobility estimates equivalent to 2/3 of all North American output in 2022. It's just back to the basic strategy, what we call the playbook here. It is, once again, China seemingly flooding the market, this time with electric vehicles. Last week, it was solar panels that were the concern. It's also the commodities themselves. It's quite something to behold here. Another headline, AI 5.5G networks to take mines to new smart levels. That's by Cecilia Jamasmi on mining.com. And it's a really interesting story about how mines are not waiting around to find out how to use AI. They're already beginning to integrate connectivity, automation, and AI into their mining operations. It brings us back to our BHP article as well, doesn't it? With the reduction in staff, one wonders if the world's largest mining company is integrating AI and seeing redundancies. Interesting question. Finally, another headline, Sweden to remove uranium ban. So file under new perspectives on uranium, Sweden has removed a uranium ban. Very interesting development there. And this is against a 2018 law by the previous government, which halted uranium exploration and mining projects, sidelining Vancouver-based districts, Viken and Melbourne-based Aura's Häggorn projects in central Sweden that hold uranium, vanadium, and other metals. Those are your news stories. Now, let's take a look at metal prices. Turning to metal prices, let's take a quick look at the bond market for context. The U.S. 10-year bond is yielding 4.19%. That is 0.08% lower than last week. And the UK 10-year gilt is yielding 4.08%. That is 0.05% lower than last week. And the Italy 10-year bond is yielding 3.77%. That is 0.13% lower than last week. So the U.S. still yielding the most, and Italy yielding the least, interestingly, on the 10-year bond front. Turning to precious metals, gold is trading at $2,124.30 per ounce. That is $87 higher than last week. Silver is trading at $24.11 per ounce. That is $1.22 higher than last week. Platinum is trading at $897.25 per ounce. That is $21 higher than last week. And palladium is trading at $958.67 per ounce. That is $6 higher than last week. So all precious metals higher. Turning to our industrial metals, copper is trading at $3.85 per pound. That is 2 cents higher than last week. Iron ore is lower. And of course, iron ore can be seen as a kind of gauge on the global economy, especially China. Iron ore is trading at $116.94 per metric ton. That is significantly lower. That is $10 lower than last week. A bit of a hidden sign there in iron ore. Very interesting. Aluminum is at $1.01 per pound. That is 2 cents higher than last week. Lead is at 92 cents per pound. That is 4 cents lower than last week. Nickel is at $7.91 per pound. That is 8 cents higher than last week. And tin is at $12.02 per pound. That is 5 cents higher than last week. Cobalt is unchanged at $12.95 per pound. Lithium is higher, back above $15 at $15.07 per kilogram. That is $1.80 higher than last week. So a bit of a bump in lithium after lying on the floor there with the 13 handle for weeks, months, almost 3 months. Uranium is trading at $95 a pound. That is $6 lower than last week. And zinc is a penny higher at $1.11 per pound. Precious metals higher, particularly gold, with silver, platinum, and palladium edging higher, but not as dramatically as gold. But really in the industrial metals, their big standout there is iron ore. And again, remember from last week, when we think iron ore, we think BHP, Glencore, Vale, Rio Tinto, for example. We think of infrastructure plans. We think of China. Very interesting there at $116 per metric ton. So perhaps a warning in iron ore and in gold, and those are your metal prices. Coming up, I'm very pleased to welcome Juan Biset, consultant and former Undersecretary of Mines and Sustainability in Argentina, in a very topical discussion on Argentina and really the opportunity that Argentina and Latin America play in regard to the United States and this whole attempt at friendshoring that we see in initiatives like the Mineral Security Partnership. So Juan sees a huge opportunity here for all partners to win, including the local communities. So it is a fascinating and, again, a very topical discussion with Juan Biset. I hope you enjoy it, and I will see you on the other side. Joining us today, I'm very pleased to welcome Juan Biset, consultant and former Undersecretary of Mining and Sustainability in Argentina, for the first time to the Northern Miner podcast. Juan, welcome to the show.
Thank you, Adrian. I'm thrilled to be here.
Well, I'm absolutely thrilled to have you here. It is PDAC week. People from all around the world go to Toronto at this time of year to really discuss mining and exploration and everything. And you're in such a very interesting part of the world there in Argentina with government experience. Again, I'm just thrilled to have you on the show to get your perspective on things. So tell us, Argentina has had a ton of news in the last few months, a new president. How are things going over there?
Well, things are moving fast. There's plenty of novelty in Argentina. This new president, Javier Milei, and his administration has proven in almost 3 months now since they've taken power, quite disruptive. They've really shaken the status quo on a number of things, not just on the way things are proposed, but mostly on the substance. They are really looking to unwind many years of government interventionism and red tape, a different take on how to do business and what the government's role should be in terms of business. There's a very aggressive, very ambitious platform of radical change that seeks to limit the role of the state to, let's call it the bare minimum, like, outside defense, that kind of thing, and to really allow market forces to do their thing. It may not sound so radical from where you're sitting, but for Argentina and many, many years of a different tack, this is quite the thing, quite new. In terms of the doability of what he's proposing, well, I think that's the largest question. His administration is new and they don't have that many MPs and legislative backing. So it's a little bit touch and go as to how exactly these radical proposals are going to come to happen, either by executive action, through legislation. There's a little bit of a tug of war now between let's call it the status quo powers and this new radical business-friendly open economy administration that's only just now taken power.
Very interesting. And what do you think this means then as it stands for the mining sector in Argentina? Of course, critical minerals have become center stage here in the discussion of governments around the world. How do you secure the supply chain, particularly automobiles? What does this mean for mining, do you think, in Argentina? It seems like it would be a positive thing, but what's your take?
Well, sort of putting aside for a minute there the exact way in which these reforms are achieved, it's super positive for mining. It's this openness, this sort of lessening the red tape. And it seems that this administration really gets mining and its importance. everything they've said regarding natural resources. In fact, they've just now proposed a sort of a 10-point platform that would be like the basis for sort of relaunching of Argentina's economy, which, by the way, needs relaunching. It's been on a sort of slide ever since I remember, downward slide. But this one of those 10 points, I think number 4 is all of the provinces of Argentina will make sure that natural resources are sort of exploited in the benefit of the community. This is like a mandate. And this may sound, again, surprising to you, but some of Argentina's provinces in the past went as far as strictly limiting, even prohibiting some types of mining. And this was all sort of a ideology fueled, if you will. This is back in the early 2000s. So this idea of mining being one of the tent poles around which Argentina's economy can be relaunched is quite new. And as I was saying, they do get it. They do want a mining to happen. And among the many minutiae, the smaller type reforms that they're proposing, there's a super ambitious, very ambitious plan of investment promotion measures that would make sure that investors coming in country will have all sorts of benefits, stability, tax stability for like 30 years. Many things that, though having applied to mining in the past, are in need of a revamp and a relaunch. And I think that those are all steps in the right direction. If I had to sum this up, I would say Argentina would be back in the game, in the mining game, in force this time.
Fascinating. And we've seen, say, with Argentina pulling out of the BRICS after Milei was elected, like, what does this mean, as far as, say, the U.S. or maybe on a larger scale, the West? Like, have you seen any concrete actions from the West or from China? Is there a sense that with Milei that there is a bias, shall we say, towards dealing with, what we loosely call the West here?
I can't overstate how radical the change is in tax in Argentina under Javier Milei. It used to be the case that Argentina internationally would align itself with, not necessarily democracies. For instance, there was a highly promoted visit to Vladimir Putin not so long ago, just I think weeks before he launched his Ukraine aggression. That's changed radically, 180 degrees. Javier Milei's administration has stated, even when campaigning, that it will only align itself with liberal democracies around the world. So that means that Argentina would easily become a significant player in terms of this competition between the West and China, if you will, for access to natural resources. Argentina, to me, seen from the West, would look like very low-hanging fruit in terms of this, catch-up game that the West seems to be engaged in with China and how sometimes you refer to its playbook of securing access to natural resources, which has started decades ago. So Secretary Yellen from the U.S. is just now winding down a visit to Chile. I think it's finished yesterday. She even went all the way to Antofagasta to visit Albemarle's lithium production facility. And I think that's a very good step forward, but I guess somewhat small baby steps. If you want to catch up with someone that has a head start, you don't just run at their same speed. You need to run faster to catch up. So the West would do well, I think, to explore more of Latin America as a friendshoring destination. There's plenty going on in Latin America and in Argentina in particular that points towards it becoming a critical region for the supply of sustainably extracted minerals for the West. And I think that would be a win-win situation for both interested parties, because there's so much the region can provide, and there's so much the West, so the Central, the US, Europe, can provide as well. And I would mention just two things, Adrian, here. I think that infrastructure is an absolute key in the sense that it immediately benefits communities where it happens, where it is built, and it provides access, unlocking resources that would not be available without it. And I think that that's super easy to do. It's not particularly expensive in countries like Argentina, where there's so much to do, like a road, a railroad spur that can be done and should be done and would be win-win. And the other one that really catches my eye, and this sort of ties back to my experience in government, is that local authorities, Argentina, much like Canada, is a sort of a federally organized government. So provincial governors have a lot of say. And they would keep on insisting on locally beneficiated minerals, on participating in the value chain a little bit more, not just becoming, providers of minerals and metals, but going one step forward in the value chain. That would, I think, be very easy in terms of setting up concentration plants or some processing facilities that, if you go to the numbers, the concentration in terms of processing that China has over the West is humongous. It's gigantic. It's like 60, 70% to the rest. So if you want to have access to critical minerals, you also need to have access to the processing of those minerals. So I think that both through infrastructure building and through engaging with local jurisdictions in ways of securing, that extra value-adding step in the chain, that would allow the West to secure long-term supply of lithium, copper, iron ore, even uranium, as Argentina has down south. There's plenty to be gained there, I think, by thinking collaboratively and long-term.
Okay, excellent. This is super interesting. So in a sense, if I understand you correctly, this sounds like an opportunity really for the West and really to take a page out of the Chinese playbook to say, hey, even just maybe like they did with Indonesia and nickel, build the processing facilities in Argentina and you will secure your supply. This is your chance, United States and the West, to catch up a little bit. Is that correct?
That's absolutely correct, Adrian. You nailed it. And I think that, there's only 3 places where you can get your minerals now. There's the ultimate friend shore would be Canada. And if not, you have Latin America and Africa. Latin America and Africa have both been sort of penetrated by China significantly. And if the West wants to catch up, it needs to come down and set up shop. And, this visit that I was referring to by Secretary Yellen, again, is a very good step forward. Or there was an Argentine delegation to Germany not so long ago exploring mutual collaboration in lithium development. But to me, it sounds like you have to speed up and really go for it if you want to secure these critical minerals, which we all know without them, there's no energy transition. But without them, there's also no industrial development. And to me, sort of the dormant factor here that has very rarely been mentioned is the fact that the world's population is going to grow by 20% by the end of the century. So that means you have super high mineral intensity just simply from population growth. If you put that plus energy transition plus the strategic value of critical minerals, you need to run for those assets. There's a competition taking place with, China, and I wouldn't want this to sound too dire, but there's a little bit of asleep at the wheel, my sense here, that Latin America being close and being resource rich and being in need of developing its industrial might and whatnot, it's, again, low-hanging fruit.
Right. And so you're saying basically when Janet Yellen comes over to Latin America, goes to Chile, tours Antofagasta's operation, you're saying rather than just showing interest and showing up, like you need announcements, like you need, okay, we're giving $5 billion or we're collaborating with XYZ government to build this, sort of like what we saw with the gold processing facility in Burkina Faso, for example, that the Russians are collaborating on. You don't get the sense they spent 3 years trying to decide. It seems like it was done quickly. And is that sort of not what you're seeing from Janet Yellen that you'd like to see? Is that what you're saying?
Yeah, to a certain extent, that's exactly right, Adrian. I think that you have to be a bit more aggressive because the other side is playing ball, and you have to be a tiny bit more aggressive. Let me tell you a little bit about Argentina and sort of the region's resources. You have Chile and Peru, which are number one, number two producers of copper worldwide. You have Brazil, the second producer of iron ore in the world. And in terms of reserves, the lithium triangle is there, which means that there's plenty of lithium to go around in the world, but this is the lowest cost, lowest carbon footprint produced lithium ever. And it's right there on your doorstep, if you will. So with very little actual engagement, but I think that I would underscore actual, there's so much for both sides to win. If I have to talk about Argentina, for instance, for a second, I would say that compared to well-established players like Chile or Peru or Brazil, Argentina is super prospective. It's only now beginning to wake up to the fact that mining can be an important sector within its economy. It's traditionally been agriculturally minded. So we share with Chile 5,000 kilometers of common geology. And Chile is the number one producer of copper in the world. And Argentina produces 0 kilos of copper. That means that there's gigantic opportunity. There's a number of very important deposits that have already been identified, but there's plenty more to go around. There's a district unveiled here by the London companies, which are getting an award in PDAC these days because of their findings high in the Andes. It's the Vicuña district, which is intersecting thousands of meters of 1% copper, 2% copper, which that means that is a gigantic porphyry and actually a mining province, not just a deposit. They've only scratched the surface and found the proverbial gold mine. So there's so much to be done with so little effort. That's I guess that would be my final point, Adrian. It's the land of opportunity just need to come down in earnest. And there's a lot of willing in regional governments to engage at that level. They understand the fact that critical minerals are critical and that they own them. But on the ground, they are worth nothing. They need to be put in production, and they need partnerships for that to happen.
Okay, excellent. So then just backing up a step then to your experience as Undersecretary of Mining and Sustainability in Argentina, tell us a little bit about that. Like, when was that, and what was your kind of big picture general experience in that role?
That was my first government role ever. I used to be, in former lives, a mining lawyer, and then I worked in-house for several mining companies. But I got tapped on the shoulder by the Macri administration. That's not the administration before Milei's, but the one before that. And I never in my wildest dreams thought I would become a government official. And it turned out to be an unforgettable experience, Adrian. I wish that you have that chance once and you take it. Because Argentina has many unattended needs. It's a country that used to be better, and it's now, as I was telling you before, slide down quite a few sort of notches down the development scale. That means there's plenty of poverty. And when you get to one of those roles where your actions actually benefit people, like real people, you open up a mine and there's real jobs, and there's the multiplier factor that comes from those jobs at the mine, or you get an agreement going for the development of a power station that will feed those mines. That thing is super rewarding. It's like you're not working for shareholder value, as important as that is, but you're working for lives. I just cannot convey sufficiently how different the feeling is when you get that done. And also, you get to understand the workings of government and of the multiple layers of government that are relevant: the municipal, the local, small government, the provincial, the governor and his agenda, the national, and even the international sort of state of play. And that turns you into a sort of a different type of beast. Now, when you are presented with a mining issue, mining problem, you see a little bit of the matrix, if you will. You can see a little bit more depth as to what might be going on and how to tackle one of those things, So to me, it was a very, very rewarding experience. It's super tiresome. You give it your all, but it's very, very rewarding.
And what was the biggest challenge? Like, what kind of hurdles and blocks were you finding when you're in that role? I assume you wanted to help develop the mining sector. Were you able to do that, or did you hit significant resistance in that respect?
Well, there was some resistance. I would say that the largest hurdle was making sure people understood that mining is a different beast now than it used to be. There's legitimate doubts and questions around mining, and there's also a lot of fear around mining. Again, you have to think that Argentina is not traditionally a mining country. It's only now waking up to its richness, its assets. So there's many jurisdictions out there, many communities that when presented with the mining proposition are a little bit concerned, and maybe a little bit is an understatement. So making sure that the mining proposition actually benefits them, which means that you have to make sure that the company is really doing its job, and that you as government are ensuring that they're working on the straight and narrow. And when they do not, as things tend to happen everywhere, that you are there making sure that they get back on the straight and narrow. That role of the government as a guarantor, if you will, of the healthiness of the mining proposition, of the value of the mining proposition to the local community, that's tricky. And I found it super interesting as well. It's only through securing the acceptance of the local community that mining can happen. You can have the best geology in the world, but if the local community doesn't want you there, you're not going to be mining. So really building trust, I think. If you need to put a title to it, the trust building exercise, that's what was the most challenging part.
Yeah, I could imagine that. I mean, we saw what happened in Panama with First Quantum. And so let's say I'm a mining executive and I'm listening to this and I'm thinking about expanding to Argentina. I might say, well, isn't there a lot of risk? I mean, we have a government that's in now that is pro-mining, but it feels like, these days, in 4 years, you could get the opposite kind of government, everything shut down. Or, look at Panama again, which was, I think, considered a fairly mining-friendly country. And then there's just a social, really, revolt against, First Quantum. Do you have any thoughts on First Quantum and just the conundrum from the mining company side of things as far as, because it sounds exciting from a prospecting point of view, but what about the practicalities on this whole situation?
Well, I don't want to sound like touting the horn too much on Argentina, but I would really sort of encourage people to take a good look at the country. When you move away from Buenos Aires, where everything happens in terms of protests and whatnot, and it may strike you as a controversial kind of place. When you move to the provinces, mining is usually welcome. There's plenty of acceptance as long as people perceive that there's a referee, that the government is not in sort of cahoots with a mining company, but rather playing its role and policing what the company does and says it will do. Just one quick thought, and then I'll go back to your question. I think that lithium is already playing the role of a pathfinder, of an opening the way for mining to happen in Argentina. Lithium extraction from salars traditionally did not require that much capital. You were talking about $300, $400, $500 million, and lithium prices were what they were, so that was super attractive. So you could start a lithium project with small money, for the mining industry. So they happened. There's like 14 projects happening in Argentina in different stages of construction and development. So that has really shown local authorities and local communities the value in modern mining. And I think that building up from there, you can easily move into the copper porphyries, which are in a different league in terms of capital intensiveness, and the size of a copper porphyry is $5 billion or something like that. So it's a building block from lithium to copper and beyond. I think that's the story. In terms of First Quantum and Cobre Panama, I think that's a very sad story for all concerned. I don't know what the company did wrong, but there's one thing that really caught my eye, Adrian. I think that Cobre Panama was too big to succeed. You know how the saying goes that things are too big to fail. I think that when you have a mine that provides like a 2% of a country's GDP, I think that's simply too significant. Like, you have all eyes are on you. And if you couple that with, I saw this documentary by a Canadian journalist not that long ago, it seemed to me that the company took for granted a few things and that it was under the impression that securing the central government's okay was enough. Again, I wasn't a part of that process, and maybe I'm sort of misstating what happened. But to me, you have to be absolutely granular. You have to build from the ground up. It's the grocery store owner in the small town next to your pit that you need to build confidence with and trust with and build up from there. It's not the central government that will help you when things start going haywire.
Very, very interesting. So it's almost like social license should be addressed, you might say, comprehensively on the government as well as on the, as you say, I think quite poetically, on the grocery store owner level. To your point, if you're doing 2% of GDP for a country, you are de facto a political entity in that country, right? And you have to treat it as such. And you almost need to be like a retail politician, showing up to the grocery store and telling people what you're up to and how that's going to help them.
Yes, I think that that might have or may have played a significant role, Adrian, on that front. And I think that in terms of social license, to me, companies needed to get their game right. I mean, I'm not saying that they don't focus on it, because they do. And there's, gigantic teams within, the majors working for social license, sometimes sort of tripping over each other on how to get that social license. I think that the right way of doing it is you start by listening. It's not the way you do things in Australia that necessarily predicts how you do things in the Puna, which is a high Andean desert in Argentina and Chile. You need to start by listening, and only then you start building your strategy. To me, many times I've found companies wanting to do the right thing, but coming with, one-size-fits-all approaches. And I think that really conspires in terms of social licensing, which again, it's as key as geology. You have no social license, you could have the best asset in the world, it's not going anywhere. You need to treat it as, to me, majors sometimes sort of treat it as an ancillary, although very important matter. It should be central to their business plan. Without it, there's no mine, period.
Fascinating. And just to wrap up on then, so looking at the larger world, I'm going to let you take this in whatever direction you want, Juan. Is there anything we haven't discussed that you want to mention, or is there anything that you see happening that we haven't discussed that you think is just interesting? What haven't we talked about that you think we should discuss right now?
Well, that's a good question. I think that mining, we always knew this, Adrian, people in the industry, how important mining is. And it's just now, I think, dawning on not industry people that mining is important. There is, I think, a role for the industry in terms of unlocking those assets and really explaining what we are about in terms of what standards really we apply, dispelling those doubts that are in many cases legitimate, in other cases agenda-driven, and ensuring that mining is perceived for what it should be, which is a win-win proposition, not just for the company, not just for the country where the company hails from, but for the local community as well and the local jurisdiction. That mining can provide. All of the elements are there on the table for mining to be a value-adding proposition for all concerned. You just need to play those cards in the right way. Infrastructure, don't build a pipeline if you can build a road, because the road has immediate benefits for the community. The pipeline only serves that deposit. That kind of thinking needs to come into play. And I think that going back to the region and to Argentina, I would encourage people to take a good look at it. It's not just established players. There's also plenty of potential. And I think that the time is ripe for Latin America to be really considered as a prime friendshoring destination.
Okay, excellent. And one final question here. Since you brought up Argentina within the region, I mean, Just as a last question here, how is Argentina seen within the region? Like another way of framing it is, what kind of relationship does Argentina have in Latin America with its neighbors? It's kind of a big question, but for people from, say, Canada or outside in Europe or wherever in the world, how would you place Argentina? What is the dynamic there?
But I think Argentina has traditionally played a very important role in the region. Together with Brazil, they are the two sort of largest continental-sized countries, the two most populous too, and the ones that had, at different times in history, very sort of significant levels of development. Argentina has unfortunately gone down the wrong track for a long time now, but still a very significant jurisdiction. And to a certain extent, it used to be perhaps more, but it still is a pace setter in certain questions. Of course, in terms of mining, we look up to the likes of Chile or Peru, which are mining powerhouses. But in general terms, I think that we are all peers, and Argentina has a leadership role to play should it want to. It's the largest Spanish-speaking country in the region, not counting Mexico, which is North America. And we have very good relations, I would say, with all of our neighbors. Again, in the region's favor, they're all democracies, with the sole exception of Venezuela. And they have been democracies for, 40, 50 years now. This, I think, I don't want to sort of berate any other jurisdiction, but there are other jurisdictions out there, mineral rich, that, go from junta to junta. And I think that you don't want to be there necessarily if you're looking to have ESG credentials and, place your product under IRA standards and that kind of thing. You want to make sure that you work with, the best pupils in the classroom. And Latin America can most certainly be that region. It already is in many cases. There's plenty more to go around in the region and in Argentina in particular.
Juan Biset, consultant and former Undersecretary of Mining and Sustainability in Argentina. Thank you for joining us and sharing your insights on this week's Northern Miner podcast.
You're very much welcome, Adrian. Thank you very much.
Thank you once again to Juan Biset for appearing on this week's Northern Miner podcast. And also thank you to FM Global for sponsoring this week's episode. You can learn more about FM Global at fmglobal.com. And thank you, dear listener, for joining us once again. If you enjoyed the show, feel free to share it with your friends at the conference or around the world. You can also leave us a review in the Apple Podcast directory. And until next week, take care.